Alright, what's going on, guys? This is GK the Trader here, and this video is going to be the keys to algorithmic scalping part 3. Now, this ongoing series that I'm doing now is it's definitely the most insightful video series that I'm doing, and just laying everything out there in terms of like the high quality teachings and whatnot. So basically this would be the type of stuff that a lot of guys would be out there selling their courses, whatnot. But obviously you guys see I'm just laying it out here on YouTube. But anyways, let's just get right into it. So you can see the overall market structure here. Opened up on Sunday over here. You see how we kind of just made a high, low, high, lower, low, high, low. So definitely tradable, but not ideal conditions. We are heading into August, obviously. But anyways, the day I want to focus on here is probably the least interesting looking day out of the week here, which is Friday, which is why I'm using this for this video, because on the hourly time frame it doesn't look like there's too much going on here. It looks like, oh yeah, it's a low probability day, probably don't want to take any trades here. Wrong. Once we go into the lower time frames here, you're going to see everything I outlined here and how this could be a very profitable day for you. And yeah, so let's just drop down right now. I'm actually going to go down to the 15-minute time frame first. And I'm just going to denote that opening price here. So this is normally what I outline first whenever I'm looking at price, just that opening price. So I'll just do opening. Let's get that right. There we go. So now I'm going to drop down to the 5-minute time frame. So if you refer back to the hourly time frame I was just showing, we've obviously been continuously grinding lower towards discount arrays, and we just reached that final discount array after that 8:30 opening. You see how we pushed lower down, essentially consequent encroachment of that daily fair value gap. I'm actually going to flip to the daily time frame just to show you quick. So this imbalance right here, you see that? So essentially consequent, the midpoint of that consequent encroachment. So now that you can see that, let's go back down. So why did I say all that? Why did I say we've obviously been continuously going lower and we hit this daily discount array? Because majority of the retail speculators are going to want to continue going short, especially after this drop lower at 8:30. So what's that mean? The algorithm is going to reprice higher, of course. Who's been making money? The shorts. So what are they going to want to do? Attack those buy stops from people who are still chasing price lower and a discount. Now, 5-minute time frame. Once we push lower into the consequent encroachment discount, what's the draw? So the draw is going to be this premium inefficiency along with this premium buy side. So if you take that London high right here, 3:30 a.m. to the low we made around 9:30, you can see that would be in a premium. And obviously short term, these three highs here, there's going to be trailed buy stops above those, so that would be the initial targets along with this portion of the unfilled gap right here. And one more, I know it's a lot, one more. This regular trading hour gap, so that'd be another premium array, the upper portion of that. So lots of higher targets here. Now, time to go down to the 1-minute time frame. So before I start anything within the charts here, I'm actually going to pull up the NASDAQ, and let me change the style here to candles, of course. So now that we get to our consequent encroachment, we missed it by just a little bit here, but essentially the midpoint of this discount imbalance. And we get to that there on NASDAQ. And what do we have here? We displace higher. We retrace down into this order block. See that? And we make a higher high, or higher low, sorry. And then if you look down on NASDAQ here, you see at that same time, it makes that lower low. So that would be our SMT divergence, which doesn't mean anything without the proper context, but we do have the proper context, so this SMT does mean something. So there we go, we have the SMT divergence, so you can obviously see that. So I can take this away now. Now, we get that initial change in the state of delivery right here. This opening price, once we trade above that, the algorithm will most likely want to refer back to that sensitive price point here, this opening. Boom. So we get that there. And what do we have here? So once we get down to this order block, essentially the midpoint, respected that. Failure swing here, obviously the SMT. Once we get that, we're not buying here. We're waiting into that SMT divergence to get set in stone. And then we get this second small displacement leg, nothing too crazy, but nonetheless we trade above this swing high right here. Not a lot, not by a lot, but just it pushing above it just like that. That's enough. So I'll go ahead and put this light bulb here to show market structure shift. So boom. Now that we get that market structure shift right there, and then a retracement into this imbalance here, along with this order, both of these order blocks. So these two down close candles is one order block. So this will be the first long in the this will be the first phase of the distribution higher, and then this here will be the second distribution leg, which this would be a more high probability long than this one, but nonetheless they're both still high probability. So even within just this 830 to 930 low here, you can see this would be the discount buy, and then you would take a partial in the premium area up here above these highs, and then you would hold the remaining contracts on for the premium up here. And then I'm gonna go ahead and get this. So back in the beginning of the video, I said the first thing I do is delineate the opening price. So we had the midnight opening price here. So you always refer to the midnight opening price, but then you recalibrate at the 9:30 opening here. So along with everything I just outlined down here, what else do we have? We're turning below the 9:30 opening, and that would be like kind of a small Judah swing, trading below the opening, making people think it's going to continue lower, obviously. And then it returns below opening price, and the best longs are below the opening price, and the best shorts are above opening price. So that would be above here. And then this buy right here that I outlined is right below that 9:30 opening. Beautiful. So I can take that away. You see that? Now, right after this first distribution right here, we now get very meaningful displacement up above these highs, taking out all the buy stops here. Yes. So we've done that. Why didn't it reverse then? It filled in the inefficiency, traded into this order block, premium, took out the buy stops, why didn't it reverse and continue lower? Because we still had a larger draw on liquidity, and it's a Friday. Friday has a tendency to retrace at least a small retracement into the weekly range. So we have that in mind. Now, we get that second displacement higher, meaningful displacement. So you take this swing low from that initial displacement leg, and you anchor it to this high created right here. And then you see this here would be known as the classic optimal trade entry, 62% retracement level. And it's also trading into this inefficiency right here. So let me outline that. So this here will be the second buy. And what else is it? I'm going to type it in. Silver bullet. So obviously it's in that 10 to 11 o'clock hour. So this will be known as the silver bullet. And not to mention we also are trading into this mitigation block right here. So this up close candle right here, change in the state of delivery, failure swing, we get back above it, and then we trade back into that candle there. So that would be a mitigation block. So we're trading into that inefficiency and the mitigation block. So this here would be your second buy, and then obviously take profit would be up here. Beautiful. And one more thing I want to outline here. So if we get the time elements in here, so look, this would be the first AM session macro, the 9:50 to 10:10 time window. That's our first AM session macro. There are 3 macros within the New York session. Not all of them always perform. Sometimes it'll only even be one that performs, but it's all about the narrative and price action that's presented to you. Time always comes first, though. So just take a look at this entire time window right here, just extended through. Where does the initial large run higher originate from? Right in that first macro. You see that? So this obviously isn't random. It's the time element that was making the market spool at this time, and obviously the 10 o'clock news. Alright, so enough said with the long entry. This will be our first algorithmic scalp to the upside. And today would be a perfect example of how you can trade both directions with high probability intraday. So I'm going to take all this off. Now, let's go back up to the 15-minute time frame, or sorry, the 5-minute time frame. We've now retraced above the buy side and into that premium imbalance. And I'm going to add in one more thing here. I don't really need to add this in, but I'm going to do it. What else do we trade into? Take this off. Obviously it shoots past it, but all that matters is it gravitates towards it and trades to it. So trades back to new day opening gap. This holds fair value for larger funds, obviously. So we see that getting traded to along with the premium arrays. And once again, I'm going to pull up NASDAQ. This is the only indicator that I use, obviously, in my trading. Alright, it doesn't want to work for me, but I guess we can just use this style of the chart. But You can see here, let me make it easier for you. This 830 high, you see how it fails to take that out here on NASDAQ, failure swing, but then here on ES, that high obviously was swept, the buy side. So this would be another S&T divergence intraday, which is another confluence to take this short here. Now, the better long was on ES for this day, but the better short was on NASDAQ today. So you can clearly see, I'm going to outline the short setup obviously in the lower time frame in a minute, but ES only yielded shorts to discount arrays down here, as on the other hand, NASDAQ offered shorts the whole way down to the sell side here and even lower. But we're not looking at the NASDAQ, we're only looking at it for S&T purposes here today. But let's get right into it. So we already mentioned all the premium rates we traded to. What else took place? We traded above midnight opening. So what did I say? The best shorts are above midnight opening, of course, yes. So let's just go ahead and drop down to that 1 minute time frame. So we have our premium and S&T divergence. Now we need is an entry model. So let's go to the 5 minute time frame. Now, I'm going to take this here, because this is what I used to enter on last week in my live stream. As you guys saw, for those who were in the live streams, I used this inversion fair value gap to frame my short. So, whenever it traded up into this 5 minute fair value gap here, how did I know it was just going to dip into it slightly and then trade lower, and not trade the whole way up to the high here? Because we have this inversion fair value gap and it's trading into this old low here. So whenever you have an imbalance, old lows become premium arrays and they become sensitive. So with that being said, this is where you go short right here, right at 4482.50. Partials come off below this internal sell side liquidity here. And look what happens whenever we took that internal sell side. See how it just consolidated, traded higher, and then consolidated into the close. And then from here, obviously our target was internal sell side. That was the main target. But what else? The remaining portion of this gap here. So on the 15 minute time frame, you'll see it more prominently. So I'll go to the 15 quick. You see this entire discount 15 minute fair value gap. We get to dig into the very low of that. You see that there? So that would be another discount array. And then if we take our fibs here, you can see the PD array matrix. So our short here was in a premium, this red area, exiting at a discount. Discount, internal sell side liquidity, discount, fair value gap here. And just to add one in here, don't really need to at all, but you can also see this order block getting traded into right here. Beautiful precision. Just look at that, right to the tick. Obviously this is in hindsight, but it's still beautiful precision nonetheless. See that? So I hope this video helped you in some way. I will be back tomorrow morning in a live streaming every single day of this week here. I look forward to it. I hope this video showed you how you can trade multiple directions intraday and be profitable, scalp both ways. So hypothetically, if you took a long here, 4473, exited here, essentially 17 handles here, and then if you took the short here, reversed, 4482, exiting at essentially 4471, this would be about 11 more handles, so that would be about 28 handles on, again, let me go back to the 1 hour time frame, on a day that looks like this. Let me take everything off. On a day that looks like this entire Friday, on the 1 hour, once again in the beginning of the video I mentioned, it looks like nothing's going on here. Clearly, if you watch through the entire video here, you can clearly see there's so much to offer in this price action here. So I think I covered everything I wanted to cover here. I hope this was insightful. If it was, drop a like button, subscribe, you know, all the good stuff. And I'll see you guys in a live stream this week. Yeah, see you guys later.